أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وبارك وسلم. Assalamu alaikum dear students, I welcome you all once again to another video lecture of the subject Afghanistan economy. Inshallah, in our today's lecture we'll have discussion on the tax system in Afghanistan or taxation in Afghanistan. So we'll be discussing, be having general information about Afghanistan tax system. Then we'll have the discussion on the tax law and the record keeping system. We'll have discussion on income tax. We'll have discussion on BRT, business receipt tax. We'll have discussion on fixed taxes in Afghanistan and taxpayers offices in Afghanistan. So let's start with the general information. So the tax authority in Afghanistan tax system is called Ministry of Finance. Under Ministry of Finance there is a department or deputy ministry which is called Afghanistan Customs and Revenue Department. Then Afghanistan Customs and Revenue Department is divided into two directories. The first directory is called General Directory is called Afghanistan Revenue Department, and the second General Directory is called Afghanistan Customs Department. So Revenue Department is responsible for taxation, and Customs Department is responsible for customs and duties. Under the Revenue Department there are tax offices in the capital and all the provinces, which are called tax office mustafiyats or provincial tax offices. And in the capital we have three tax offices: small taxpayers office, medium taxpayers office, and the large taxpayers office. Inshallah, we'll discuss them later. So in Afghanistan tax system, every individual, natural person and legal person is issued with a TIN number, which is called tax identification number, and this is issued from a tax system which is called SECTAS, Standard Integrated Government Tax Administration System. So every individual, whether a natural person or legal person, is issued a TIN number under which he reports all his tax returns. And all individuals, whether natural or legal, are bound to pay their taxes on monthly, quarterly and annual basis. Only a few type of individuals, natural or legal, are exempt from paying taxes, and the exemption is confirmed from a directory under Revenue Department, which is called Exemption Department. And when they confirm your exemption, then you are exempt from paying taxes. So all information provided in the tax returns are gathered by the Afghanistan Revenue Department through examination of books and records of the taxpayers, or a third party associated with the taxpayer is confidential. That all the information which is collected by the tax offices is confidential. Such information is not disclosed to anyone else outside the Ministry of Finance unless authorized by the law. Disclosing confidential information or misusing their position in any unauthorized way for the purpose of direct or indirect benefit will be referred to the Office of Attorney General, which is called Loisar and Wali in Afghanistan. So any person who misuses, any person within the Ministry of Finance who misuses the taxpayers' information will be introduced to the Attorney General Office for the misuse of the information, then there is imprisonment or penalties from the Attorney General's office on that person. The Ministry of Finance administers a fee that is not contained in income tax law. This is the airport departure fee for 500 Afghani for international departures and 50 for domestic departures. So that's the general information about the income, about the taxation in Afghanistan or tax system in Afghanistan. Now let's talk about the tax law. Afghanistan tax law was enacted in 2009. Method of accounting within the tax law is that the companies in limited liability and corporation companies, they are required to compute their income using the accrual method of accounting, which recognizes income and expenses when due. So the method of recording accounting system within the tax law in Afghanistan is accrual method, right? The taxable year. The taxable year in Gregorian year is the Gregorian year, which starts from the first day of January and finishes on the last day of December. But now, before the tax year in Afghanistan, before it was according to solar calendar, starting from first Hamal and ending with the last day of Hut. But now it has been changed to first of Jaddi to last day of Qaus, which is 21st of December till the 20th December of the following year. So if we say that the taxable year for 2020, it will start from 21st of December of 2019 till the 20th December of 2020. This is taxable year or financial year based on the income tax law of Afghanistan. Availability of records. Ministry of Finance officers are entitled to have access to the business premises and the inspection, examination and copying of books of accounts, papers, records, etc. held by the person or by the third parties. By law, Ministry of Finance designated officials or officers, they have the right to access to all the information related to the income and expenses or related to the tax. They have all the right to examine, inspect, get a copy of all the records, related records, and even they have the legal right to access to your business premises. Audit of the taxation. The Afghanistan Revenue Department regularly conducts audits, which is called tax audit, of the taxpayers' records to assure accuracy of filing and correct payment prescribed by the income tax law. So every tax office has mainly three departments within it. The first is called Customer Services Department, the second one is called Case Management Department, and the third one is called Audit Department, and there is another, the fourth one, which is called Legal Tax Enforcement or Law Enforcement Department. So four departments work under each tax office. So in Afghanistan there is self-reporting system. So all the taxpayers are required to self-report their tax returns to the Customer Services Department. It passes through Customer Services Department and then it is introduced to the Case Management Department. Case Management Department has initial review of the tax returns and assesses all the unpaid initial taxes and then issues initial tax clearance. If needed, the tax files are introduced to the Tax Audit Department with thorough review of all the records takes place, where they have access to your records, to your premises, and they make sure no tax is pending. They checks all your filing system to see if you have obeyed the tax law, filing requirements of the tax law, record keeping requirements of the tax law, in tax payment requirements of the tax law. Auditors will thoroughly review your file and they assess if any taxes are payable. After making those payments, they issue a final tax clearance. If anyone is not complying with the tax laws, or they are not responding to the cash management department officers or to the tax audit department officers, that file or that entity is introduced to the tax enforcement or law enforcement department. Then law enforcement department, they take legal actions against them by using a police force to make the taxpayer compliant. So that's all about the tax system here. Now, record keeping. Based on the law, taxpayers are required to maintain business records. Records include ledgers, journals, vouchers, financial statements, and accounts, income tax records. They are to be supported by the source documents. Afghanistan Revenue Department does not specify the records taxpayers need to keep, but all the records which can support your tax return and can support what you have reported to them should be kept effectively and efficiently. The record must clearly reflect the income and expenditures. The record must be reliable and complete, provide the correct information necessary to calculate the tax obligations. The record must be supported by source documents to verify the information content in the records. It must include all the documents such as appointment books, logbooks, income tax returns, withholding tax returns, certain accountants' working papers, etc. Persons engaged in more than one businesses are required to keep separate records for each business, and for all the businesses there should be a permit or a license from the license issuing authorities in Afghanistan, and all the entities should have separate TIN number to report its taxes under that. Income tax in Afghanistan. There are two concepts. One is called tax avoidance, the second one is tax evasion. Tax avoidance is the legal means available within a tax regime used to reduce taxes while remaining compliant, paying only correct amount when due. This is called tax avoidance. When you reduce your taxes by proper planning, by staying compliant to the tax law, and reduce your tax payment, this is called tax avoidance, and it's allowed by law. The second is tax evasion. Tax evasion based on the income tax law is not allowed. It's illegal. It means to deprive the government of payment of legitimate taxes due, establishing the basis for non-compliant. When you are not compliant, you are misusing the tax law, and you are hiding your income, and you are and showing more expenses to reduce your taxes, or you have not withhold taxes, or you have not you are not abide by the articles of the income tax law. Due to that, you have reduced your tax liability. This is called tax evasion. Tax evasion is not allowed by the law. Anyone who do tax evasion will be introduced to the tax enforcement offices. Income tax in Afghanistan, there are two types of income. One is for income tax, one is for corporate or legal persons, and the second is for natural persons. For corporate or legal persons, it's a flat 20% income tax on net taxable income. Net taxable income is computed by deducting all ordinary and This is the business expenses from gross income. So net income is taxable for 20% of the flat tax. Next type of income tax is for natural persons. Natural persons are of two types. One is working in other organization and receiving wage or salary, and the second one is sole proprietor, means doing business as a sole proprietor business. So anyone who's working in any organization, he is liable to pay wage withholding tax, which has provision in the law, which we'll discuss inshallah in upcoming lectures based on the article 58. Natural persons are required to pay wage withholding taxes if they are working in an employee. Sole proprietors, they are required to self-report their taxes. If you are working in an organization, then the organization is liable to withhold tax from you and to report to MOF. If you have your own business, then you will report your taxes through tax returns to the Ministry of Finance. Resident natural persons are taxed on income for all sources worldwide. For example, wage, salaries, rent, certain types of partnership income, royalties, etc. All of them are subject to income tax. Non-residents are taxed on all income with its source in Afghanistan. Now, who is a resident person and who is non-resident person? Resident person is anyone who spends more than 183 days in Afghanistan. It's called resident person. A non-resident person is the one who is not living in Afghanistan for more than 183 days and lives outside Afghanistan, right? But he generates income from Afghanistan. So the source, only the source which is within Afghanistan boundaries is the income from that source is subject to tax. Other sources are not subject to tax for that individual person. The employer is required to remit the state of the amount withheld no later than 10 days after the end of the month in which the amounts were withheld. The remittance is made directly to a branch of the Afghanistan Bank. There are annual reporting requirements for both employers, both to employee and to MOF. Means that if you are working within an organization, at the time of paying salary or wage to you, they are required to withhold tax, the certain percentage of tax. Then after 10 days, the organization is required to report that tax to Ministry of pay the tax to one of the branches of the central bank and report that tax along with the tax payment slip in the tax return to Ministry of Finance. And that's on monthly basis. On the annual basis, the organization where you work is required to report its own annual income tax to the Ministry of Finance and a copy to the employees as well. Next, we have business receipt tax. There are three categories of business receipt tax. One is 4%, one is 5%, and one is 10%. A 4% business receipt tax is imposed on gross receipts of all types of income of the corporations and limited liability companies and individuals whose income is more than 750,000 per quarter. Means all the businesses who has income more than 750,000 per quarter are to report 4%, to pay 4% tax on gross income on quarterly basis, whereas 10% BRT is payable on the gross receipts from provision of the following services. If you are an airline business, if you are a telecommunication services business, if you are a 5-star hotel service provider, or if you are a superior service provider restaurant, you are required to pay a 10% tax on quarterly basis from all your gross income. Gross income means that all you receive. You will not without excluding expenses. You have to pay 10% on quarterly basis, and this is your expense. Then this 10% or 4% is reported as an expense in your income, profit and loss statement, and in your annual income tax return. Other hotels and restaurants and businesses who have income less than 750,000 Afghani per quarter, they are required to pay only 5% business receipt tax on quarterly basis. And there is another tax by the name of value added tax, which will replace the BRT, but it's now not implemented in Afghanistan. There is a possibility that this type of tax will be implemented in the future. There are some fixed taxes as well. For example, fixed tax on imports. Persons who import goods are subject to fixed tax on the cost, including custom duties of the imported goods, which is 2%, and now it's 4%, and 3% for those without licenses. On other transport of goods, passengers for business purpose, persons who transport passenger or goods for business purposes are required to pay an annual tax before renewal of their vehicle registration, and that is paid to them at the time of vehicle registration, renewal of the vehicle registration. Other fixed taxes are contractors. This tax is withheld from the gross amount payable to the contractor, which is 2% for the business license holder and 7% for those without. For example, you provide services to any other organization. So if you have a license, that organization will withheld, means cut 2% from the gross invoice. For example, if you are to receive 100,000 from that organization against your services, they will withhold 2% of the 100,000, and remaining will be paid to you. If you have no license, they will withhold 7% from that 100,000, and the remaining will be paid to you. That 2% or 7% withheld will be reported by that organization to Ministry of Finance on monthly basis, and a copy of the tax return reported to Ministry of Finance along with the payment slip will be provided to you. Fixed tax on exhibitions. This applies to natural persons who provide entertainment such as theater, cinema, radio, television, music, or sport in Afghanistan. Income from these businesses is subject to a fixed tax of 10% of the receipt from sale or admissions or tickets. So if you have sold tickets, so all the income from those tickets is subject to 10%. That is fixed. Fixed tax on small businesses. Shopkeepers and other small businesses that do not keep detailed records or classified accounting system to amount of gross income received and pay a prescribed fixed tax accordingly, and that rate is fixed by the officials of Ministry of Finance. They physically visit your shop, they calculate your income and your inventory, and then on the spot they charge you a fixed rate of the tax, and you pay, and your liability is clear. Now let's talk about the taxpayers offices. As I earlier discussed, there are mainly 3 taxpayers offices. 2 of them were here on this slide. The first one is large taxpayers office. This taxpayers office is for the large taxpayers who are large from the investment and from its size. So this office is assigned to those businesses which are large, so they can report their taxes. It serves as a one-stop office for a selected number of large taxpayers. Criteria for inclusion in this program include annual turnover, risk to municipal revenues, specialized industry type, and amount of capital investment. So on the basis of these parameters, a company is assigned to the large taxpayers office. Second one is a medium taxpayers office. The following categories are included as a medium taxpayers, and medium taxpayer office is assigned for them to for reporting their monthly, annual, and quarterly tax returns. Business entities required to prepare balance sheets. Diplomatic or international representatives are also required to report to MTO. Educational or health institutions outside the state system are also required to this office. Foreign-owned businesses are also required to report to these offices. Unregistered sole proprietor or legal entities whose annual gross income does not exceed 5 million or with initial capital of 15 million, they all are required to report to the medium taxpayers office. So how it takes place? For example, when you want to start a business in Afghanistan, first thing you will do is you have to register yourself with the Afghanistan Commerce and Industries, a directory called Afghanistan Central Business Registry and Intellectual Properties. So you have to refer to that office. The office will give you some documents. You have to fill those forms, and you will be required to get a TIN number. And TIN number is issued from the Afghanistan Revenue Department, a section called TIN Directorate. You will go to the TIN. They have their own requirements. They have the form. You will have to fill the form and fulfill the documentary requirements. They will issue you a TIN, tax identification number. You will take this TIN with you and go to the Afghanistan Central Business Registry and Intellectual Property. If you are doing a business, commercial business, they will issue you a license. The license will bear a license number and the TIN number. So the license will also have your business name and your corporate name. Then after you have registered yourself with ACBR and Ministry of Finance, you are allowed to do business, right? Then you will have to get yourself registered in one of these tax offices: small taxpayers office, large taxpayers office, and medium taxpayers office. You will refer to the revenue system within the Afghanistan Revenue Department. There is a small unit. They will review your documents, and then they will suggest you which tax office you should register yourself. So if your business is small, they will tell you to get yourself registered in the small taxpayers office to clear your monthly, quarterly, and annual taxes. And if your business is of medium size, then you will be referred to the medium taxpayers office. And if your business is a large size business, then you will be referred to the large taxpayers office, to where you will report monthly, quarterly, and annual taxes, right? So there are three types of taxes: monthly, quarterly, and annual. Monthly taxes, which we will discuss inshallah in our upcoming lecture in details, but here I'll give you short information about these three types of taxes. Monthly taxes are that as a business you have to report to Ministry of Finance is rental withholding tax. Means the rent that you have paid, you have to withhold a tax before paying that to the landlord and report to the Ministry of Finance. Wage withholding tax: before paying to your employees, you will have to deduct tax from the salaries of your employees and then pay to Ministry of Finance through the central bank and report to Ministry of Finance. The third one is contractor withholding tax. You have vendors, so before making payment to the vendors, you will have to withhold certain type of tax and then pay the tax to the Ministry of Finance account and report your tax return to Ministry of Finance. That's on monthly basis. 3. Number 2, quarterly base. Quarterly base, you have business receipt tax or BRT. So you will have to pay either 4 or 5 or 10%, looking at your type of business, as I earlier discussed. The third type of tax is annual tax, which is called annual income tax return, through which you will pay your taxes. You show all your income and all your expenses. From all your income, you deduct all your expenses, and then on the net profit you pay 20% corporation tax, and you prepare a file where you put all your monthly tax returns, quarterly tax returns, all the supporting documents of expenses, especially rent, wage, and vendor expenses, and you submit that file to the relevant tax office, and then where the review of those files takes place, and based on which you are issued initial tax clearance or the final tax clearance. So this is how it takes place, is a tax system in Afghanistan, right? So that's all for today with regards to taxation in Afghanistan. And if you have any questions, any comments and suggestions, please do let us know. Thank you so much for being with me. Wassalamu alaikum wa rahmatullahi wa barakatuh.